As always, when we have a question, we're going to start by reading the whole question. Pink Ink is a wholesaler who sells products to retailers. The following transactions occurred during 2020. Provide the original entry, also called the transactional entry, which is an exchange between two parties, as well as the adjusting entry for each scenario. The company has a December 31st year end. They record adjusting entries annually using the balance sheet method. So this is exactly what I demonstrated to you when we did the flow chart. All right, let's go back to the question. At the start of the year, the business has office supplies of $1,200. On July 18th, they purchased $1,500 of additional supplies on account. At December 31st, a count of the supplies indicates that there are only $600 of supplies remaining. So I'm going to move down so that I can start working on this to do my calculations. I prefer to work in T accounts, so that's what I'm going to do. I know supplies have an opening balance, so a balance that's already on the trial balance of $1,200. Assets are debit, $1,200. On July 18th, they purchased $1,500 of additional supplies on account. So July 18th, what did we get? We got an asset because it has future economic benefit. What did we give away? We gave away an IOU, a promise to pay our supplier in the future. Accounts payable, both of these $1,500. I'm going to update my supplies account. At this point, I have $2,700 of supplies. Now, time moves on. At December 31st, a count of the supplies indicates that there are only $600 of supplies remaining. So if there are only $600 of supplies remaining, I can look to see, what do I want my T account to say? Well, I want my T account to say $600. If I then work backwards, I can calculate how to move from $2,700 to $600. That's a debit balance that I want. I need to put a credit against it in order to reduce supplies by $2,100. That's what's being used or consumed to help generate revenue. I now have to record my adjusting entry. December 31st. What did I get? I got the use of the supplies to help generate revenue. Supplies expense, $2,100. What did I give away? I gave away or used up supplies, $2,100. You'll notice that now my supplies expense has a balance of $2,100. That's because this has been used or consumed to help generate revenue. If I look at my statement of financial position, I can see that under current assets, I'll have a balance in my supplies, $600, which have future economic benefit because I can use or consume it in the future to help generate revenue. On my income statement, I'll have an expense, supplies expense, $2,100. That's being used or consumed to help generate revenue. Let's see if we're matching our flowchart. We started off with an opening balance. Then there was an exchange between two parties, debit asset, credit cash, or liability. Over time, we used or consumed the asset supplies. In that case, at the end of the period, I have to do an adjusting entry, debit supplies expense, credit supplies. Perfect. Supplies expense.